Good morning, everyone. My name is Yo Hui-en. My entry number is 263308. Now I'm going to present about the individual assignment for the title, The Determinant Principle of Corporate Governance in Blue Duck Express Limited, Berhad in India. Now, I would like to explain about the corporate governance issue associated with Blue Duck Express Limited in India. Blue Duck has maintained a strong culture of value, ethics, and integrity. The basic philosophy of corporate governance at Blue Duck is to achieve business excellence and to create and enhance the value of the shareholders, customers, employees, and business associated, thereby making a significant contribution to the economy. Blue Duck's corporate governance framework is to reflection in its culture, policy, relationship with stakeholders, and commitment to value. The company and worked to achieve the highest level of transparency, accountability, and integrity and responsibility, and continue to focus on good corporate governance in line with local and global standards. As a responsible corporate citizen, the company comply with applicable law of the land in letter as well as in spirit. Principle of corporate governance issue affect the internal factor and external factors. In order to deal with each problem, corporate governance has to put forward strategy to assess the issue which related with the business operation. They have three objectives in this research. The first one is to investigate the impact of company accountability toward first internal factor. The second one is to investigate the impact of company accountability toward the external factor. The third one is to investigate the impact of the company accountability toward the internal and external factor. The research question is, what is the impact of company accountability toward first internal factor? The second one is, what is the impact of company accountability toward the external factor? The last one is, what is the impact of company accountability toward first internal and external factor? There are some literature review in this research. The first one is corporate governance. What is the corporate governance? Corporate governance is a system that guide and control company rule, practice, and processes. The company's board of director is the main force affecting corporate governance. Next is the company performance. Corporate governance practice has a positive relationship with the company performance. Their finding are consistent with agency theory, which state that good corporate governance practice had lead to better company performance. Under the company performance, there have two, which is return of asset and return of equity. Return of assets (ROA) is the calculation method is to compare the available net profit of common shareholders with total asset. ROA is the one profitability ratio in the analysis of financial statement. The ratio is most often highlighted because it is able to indicate company success to create profit. The next one is ROE. ROE is the measure of the profitability of a company's ability to generate profit based on the company equity. ROE can be calculated by comparing net income and after tax with total equity. Next is the credit risk. Credit risk is the most significant risk faced by a bank, and success of its business depends to the greater extent than any other risk on accurate measurement and efficient management of this risk. The literature on credit risk follow the same trend as for agents connected to this subject, means that it has been expanding in recent years. Liquidity risk is defined as the total difference between net income and the equity market value. This is due to the sudden withdrawal of deposits and the inability of banks to obtain the required cash at the reasonable cost. The money is expected to come from selling assets or accepting new deposit. Operation risk. Operation risk is the management cover the mechanism, tools, policy, producer, and also the processes, including management oversight to identify, assess, monitor, report, and control operational risk. The last one is macroeconomic risk, the explanatory variable affecting GDP growth in foreign direct investment. FDI has been the main sources of funding for a country's economic activity. There are some studies on the relationship between FDI and economic growth. Malaysia needs to maintain strong GDP growth to attract FDI inflow. Now move to the methodology. Data sources. The study conducted racial analysis from secondary data of Blue Duck Express annual report from 2014 to 2018. The financial statement composed of the income statement and balance sheets of the annual report are analyzed to obtain the time series raw data. The study used IBM SPSS to initiate ordinary risk squares. There are two factors, which is internal factor and external factor. Internal factor consists of return of asset, return of equity, credit risk, quick ratio, average collection period, debt to income, operational ratio, operating margin, and corporate governance index. While for the external factor consists of GDP, which is growth domestic period, inflation, interest rate, exchange rate, and also standard deviation. Net to income was used as the dependent variable measured by total liability divided by total income to represent the credit risk of the company. By using multiple linear regressions analysis in SPSS to select ordinary least square analysis to study the significance variable for the dependence variable. Now move to the analysis and finding part. The first one is descriptive statistics. Descriptive statistics state the basic feature of the data. Means can be regarded as the average of each internal and external variable during 5 years, while standard deviation demonstrates how dispersed is the means. The lower standard deviation, the less dispersed the data. According to the table above, the average value of debt to income is 2.2979, which means that every 1 ringgit of debt will be covered with 30 cents of total income. The mean implies that Blue Dart Express has a strong total income to cover the debt, while the standard deviation shows moderate volatility of risk of 8.6% throughout 5 years. The quick ratio recorded the means of 1.4483, which implies that every 1 ringgit of debt will be covered with the current asset 1 ringgit and 40 cents. The average collection period state the highest standard variation of 4.92, which means that the average collection period of Blue Dart Express is more unpredictable. The mean show that the company took more days to receive the payment from customer and indicate the highest volatility of risk. Inflation show the means of 4.90386, which moderate volatility of standard deviations 1.4885. The exchange rate recorded the mean of 65.1776, and the standard variations is 2.8566. Next is the correlation. The correlation of debt to income to both internal and external factor of Blue Dart Express is shown in the table above. The SPSS result indicate that all internal variable, which is ROE and CG index, and external variable, which include external exchange rate and standard deviation, are positively correlated to the dependence variable, which is the debt to income. However, return of asset, credit risk, quick ratio, as average collection period, operational ratio, operating margin, GDP, inflation, interest rate, are negative correlated to debt to income of Blue Dart Express. As for the significance, the internal factor, operational ratio, and CG index are significantly correlated to the debt income, as their p-value are below 0.1 and 0.05 respectively. Meanwhile, the inflations and exchange rate are the significant to the debt to income among all the external factors, which is the p-value below 0.1 and 0.05 respectively. The remaining internal and external factors, which such as ROE, ROA, credit risk, quick ratio, average collection period, OPM, GDP, interest rate, and standard deviations are not significantly correlated to the debt income because p-values is more than 0.1. This p-value tells the operational ratio, CG index, inflation, and exchange rate are related to the debt to income, which is the dependence variable of Blue Dart Express. According to the table above, represent that model summary of dependence and internal and external factors. The adjusted R-square of 0.693 means that the model can explain 69.3% for model 3. According to the table above, we can know that the exchange rate, average collection periods, and inflations are not significantly affected by the dependent variable, as the p-value is more than 0.1. The debt to income of Blue Dart Express would not be affected much by exchange rate, average collection period, and also the inflations. According to the table above, it shows that the coefficients result for model 3 has no significant variable to debt to income when internal and external factors were tested in SPSS. All of the independent variables in this model are p-value more than 0.1. However, exchange rate has the smallest p-value at 0.261 among all the independent variables, and it has a positive impact on the solvency of Blue Dart Express. This means that as the exchange rate rises, the debt to income also increases. Now move to the recommendations. The recommendation of these studies that should be addressed is it would be better to have a benchmark with other industry in order to compare the ratio analysis. Therefore, it should be suggested to the future researcher to increase the number of observations and the internal and external factor that represent the element of risk towards the company, as well as adding other industry to be able to compare. Thus, the significant result will be proven to the strong evidence of this factor influencing the explainable to the dependence variable. In conclusions, based on the study of patterns and the analysis of correlation, Blue Dart Express can face a few quality risks calculated by debt to income. Once the debt to income deteriorates, this means that the company has to face the income liability, which include operational activity. Blue Dart Express will have to face debt to income more and cannot cover back their losses. It shows the principal corporate governance of Blue Dart Express is very important to efficient managing their debt to incomes. That's all for me. Thank you.